So again, in the negative for the oil share, but it's pretty much following what's been happening with the rest of the markets globally, about 1.3% in the red this afternoon. I want to get Makwe Masilela from Makwe Fund Managers to join me now. Just take a look at the market. So we've got a lot of questions around Russia at the moment. But before we get into those specifics there, Makwe, just, I mean, it's what we expect, isn't it? 1.3% in the red. We've got stocks taking a beating, but we're no different from anyone else responding to what's happening between Russia and the Ukraine at the moment.
Definitely, Devin, and all because we know of these financial sanctions that we've been seeing, all because we know of this sweeping, what do you call it, the ban that might come from the U.S. when it comes to oil imports coming from Russia, and because we know that the economy itself has been trying to get out of the woods when it comes to COVID-19. And also, Devin, it complicates issues for central bankers who've been trying to phase out the easy money. So it's not a pretty picture, because high commodity prices as well gets to be very negative for most countries. And we know in a situation where inflation is high, that gets to damage your economy.
And the response to what's happening between Russia and the Ukraine has been quite interesting, hasn't it? So we've got an imminent announcement that could come from both the UK and the US on oil imports from Russia. But then, I mean, something that really snuck by us quietly over the last few days was the fact that the new development bank, which essentially is a Brics bank, isn't it, has now cut out doing new transactions with Russia. That's the reaction from them. That's a very interesting development, considering the fact that South Africa too is in this body.
Definitely, they had to, and remember, as it is, Devin, they've lent them almost 3.5 billion US dollars as per end of last year. But remember, the very same bank is using more or less the same standards used by your MF, your World Bank, and also more importantly, where are they getting their money? From the very same capital markets. So they don't want to put themselves at risk, and they're saying only new transactions won't be entered into. And now we know that they don't even want to risk being charged more, because their credit rating will be downgraded. And if they start raising money more expensively, then it means whoever they have to lend that money to, they have to charge them high interest rates. I guess the guys didn't have much of a choice but to take that stand to say, listen, we're not going to be used as a tool against the World Bank or the likes of the IMF.
Over the past few hours, we've seen this oil price between 120 and 125. I mean, the last hour, I've looked at it, $132 a barrel. I suppose, you know, this is all in preparation for what appears to be an announcement coming from the U.S. that might make this banning on Russian imports just official. It doesn't paint a pretty picture for our inflation here at home and across the world, does it?
Definitely it does not, you know. Remember, Russia itself, daily, they export almost 5 million barrels a day. And when it comes to the U.S., they've imported almost 20.4 million barrels per month when it comes from Russia. And also, when it comes to if you put it in percentage terms, that accounts for almost 8% of their liquid fuel. So now it's going to start increasing fuel prices that side. And back home here, we know that with the rent also struggling, then that's inflationary in its nature. And also remember, it's not only that, other stuff going up as well. You know, your agricultural crops, your wheat, your corn, you name them. So it's not a pretty picture. And we know that our Reserve Bank have started increasing interest rates in November. And when they have to meet again, chances are they will continue to try to increase interest rates. You are just worried, Devin, that all of these central bankers, they don't start increasing interest rates at a very rapid rate, because that will definitely not just kill the markets, but the general economy as well.
Yeah, just before I let you go, I mean, if there was one result that stood out today, it was the Shoprite results. I mean, you've got the Africa's biggest grocery retailers, so how they doing business on the continent and in the country is pretty much a good indicator of what's happening economically. What did you make of them? It appears towards the end of the year they were doing something right, or consumers have the money to buy groceries, and a lot of it.
Devin, 50% of our population spends more than 50% of their income on food. And we know that the Shoprite checkers, they are well represented, especially on the lower LSM. And hence now they started biting or eating the lunch of other grocery retailers when it comes to the middle and upper market. And then now we know that the guys themselves, they managed to increase their sales by 10%, but mainly the South African supermarkets managed to do very well. When it comes to furniture business, continue to struggle. Yes, the guys managed to increase their profits by 25.5%, and obviously they had to reward us as shareholders with increasing their interim dividends by 22%. And don't forget that delivery app is doing very well for them.
Yeah, indeed. Well, Makwe Masilela from Makwe Fund Managers, thanks very much indeed for talking to us. Well, let's take